Tell us what you think the various scenarios are, upside and downside for Tesla, and why you come out on it as a neutral.
Well, I think there's a balanced view of near and long-term catalysts, in terms of positive and negative. So in the positive side, I think deliveries will actually come in a bit better over the next few quarters as they still ramp in China and around the world. I also think they're probably going to be one of the biggest, if not probably the biggest beneficiary of the U.S. stimulus, with likely addition of EV credits. They're one of the U.S. main EV producers. So I think those are two positives. That said, you go more midterm, I think there's some cautious points. Raw material costs on the battery side are up about 50% year to date. That's going to phase in as contracts reset over the next year. You have a lot of capacity coming on next year, and that's where I get a bit more cautious, because you're going to have about 1.7 million units of capacity for Model 3 and Y. And that would require almost twice, a little shy of twice, the record luxury sedan and SUV sales. And then I think there's an underappreciated risk on regulation on autopilot. There's been some pretty scathing remarks by the NTSB. They wrote a letter really highlighting maybe the need for driver monitoring, maybe limiting the use of these systems given some of the accidents out there.
Sure.
And I think that also could be on the horizon.
What about full self-driving? It's interesting when you kind of go through a lot of the analyst calls on Tesla. They obviously have a certain assumptions for just purely selling automobiles, but they often also include assumptions for the Tesla roofs and for full self-driving, and some pretty aggressive assumptions there. I mean, are those threatened by what you're saying about autopilot?
I think it's an important factor. And yeah, absolutely. When you look at Tesla, it's not about the auto company. There's other, factors that we included in our analysis as well. But yeah, I mean, if you're going to see full self-driving roll out, from most of the discussions that's out there, this is going to be an advanced level 2 system, not level 4 and 5, which is sort of the absolute complete version of self-driving that many people might be thinking of. And if that's the case, that's going to put more attention on the description of full self-driving. It also means there's going to be more advanced features that might actually raise even more concerns for regulators. So this might become more of a bit of an issue for the company.
And it was also interesting to me as you remind us that without the credits, Tesla wouldn't necessarily be a profitable company. I mean, in terms of the auto business, are things trending in the right direction for it as far as you're concerned?
I mean, to be fair, the results are quite good. It's just they're not as good as maybe the optics look at, right? So you have to pull out. They have, 1.5 billion in EV credits. They also pull out stock-based comp, and that's a real cost, and that's the material cost. If you take out those two factors, they actually lost money in the last 12 months. In fairness, they also have quite a generous CEO incentive plan. A lot of that was a big hit. Yeah, that back, it's profitable, but much less profitable than the headline result. And those are important factors, because EV credits aren't going to stay around forever. And, you're talking per employee, it's maybe per salaried worker might be over $30,000. It's a big part of comp that they're, excluding, that more traditional companies would have to include.
Shepard Smith here. Thanks for watching CNBC on YouTube.